Hello, everyone, and welcome to the midweek, first ever midweek market update for Fundament. Today is a special day because we did not expect markets to, give up the way they gave up today. It was one of the least expected because as we have been talking about that, December is not the month when everything happens. When then much happens during the last 2 weeks of the month of December. But what we saw today was something out of the out of the box. So this was actually seen at the end of 2021 as well, just when 2022 correction started. And we are seeing similar kind of signs happening here right at the top of the all-time highs, whether it is NASDAQ, whether it is S&P 500 or Russell 2000. So what's going on? So let's take a look at our charts and see whether we have any clues. So as we have been talking about as we spoke about in the last week's call, it was those those patterns, those candlesticks that gave us some clues. Still, markets went on and made a couple of two more days of new highs on Dow Jones, on Nasdaq, while S&P futures did result into a new high, but spot S&P has not made a new high. That's something for us to ponder upon. So what's going on right here? If you look at today's candle, where exactly has it reacted from? It is reacted from upper end of this rising wedge, which is in red. If you see those red lines, it is exactly at the upper end of the wedge. That's the first sign that yes, it wants to go down from. And this big kind of big red candle, which is bearish engulfing red candle, is a sign that market wants to go down from here. Then there is another channel, green channel right here at the upper end of the channel. Markets are reacting. So there are a couple of signs that yes, markets wants to go down. On top of the icing on the cake for the bears, where exactly did it react from? Exactly at the all-time high, which is 4808. Was it last time? Yes, it was 4808.25. So just above that, and it just reacted and sold off big time. So we have to be very, very careful in terms of if you are holding your longs, I would say just book out if you have your gains, because markets are definitely looking some kind of cracks are looking in the market. So you definitely want to be careful right here. If you move away from S&P and move to NASDAQ, similar pattern. Although it is far away from all-time highs, it is a new all-time high, far away from the previous high, but exactly at the top end of the rising wedge. Definitely not a good sign to hold your longs at, especially given that there has been negative divergences on S&P and on Dow Jones, on S&P 500 and NASDAQ. Both the places usually negative divergences on RSI, extremely overbought RSI. Extremely overbought as in the last 6 years, 7 years, we haven't seen those kind of RSIs hitting on the market. So definitely not a good place to hold your longs. Does that mean you go short? I would say not yet, because as I've been saying in the past, this market has primarily driven by weekly candles. So if it is a weekly candle, which is still to be closed, weekly would be closing day after tomorrow. So unless the weekly candle closes bearish, I would not be overtly bearish for the medium to long term. Maybe short-term shorts would be something for us to watch out for. There is one thing though which is very clear. As I spoke about, S&P 500 didn't make a new high. Look at this, but there is negative divergence on the RSI as well as MACD. So definitely not a good sign. Just look at here. This high was at what, 4634? We made a new high of 4800, but RSI and MACD both are not making a new high, which means definitely a sign to be very, very cautious. Even if you do not want to go short, you definitely do not want to hold longs here, unless weekly candle all of a sudden reverses tomorrow and day after and we close beyond the new high, which would be a sign that market wants to go beyond. But given that there has been 7 consecutive weeks of gains, markets were looking for excuses to sold off. There were no excuses, but yet market sold off. So yes, you want to be really, really, really careful before going into longs at this moment. Moving away from S&P to NASDAQ, similar. Weekly, yes, negative divergences, yes, all-time highs in terms of the prices, but it does not give us a confidence that we want to hold our longs here. Definitely, we want to book out of the longs, especially the Weekly has a negative divergence. Daily has a very, very bearish candle as well. So I do not feel comfortable holding my longs here. You see, bearish engulfing candle, not a good sign. At the top or end of the rising wedge, definitely not a good sign. You definitely want to be out of your longs at this point. And if you move away from the NASDAQ and Dow Jones to NASDAQ and S&P to Dow Jones, where we are, look at this. This is extremely, extremely bearish. Honestly, on the short term, not for the long term, as of now. Where is RSI? All-time highs, 87.58. Just look at this RSI. If you look at this reading, where was it? It was at 87.49. I haven't seen those kind of RSI ever in my life earlier. Of course, there was similar RSI sometime in 2018, which was around 87, but not 87.58. It was 86.90, I guess, if I'm not wrong. You see, go back, and there has not been such a high reading back before 2018. Yeah, so you have to be very, very careful before you hit your longs here. What happens when markets hit such prices? Definitely there comes a correction. I would not say it resumes bear market because I have no clue whether bear market wants to resume here or not. But definitely a correction is needed, especially when you have 7 consecutive weeks of green candles. Look at this. Consecutive weeks of 7 consecutive weeks of green candles. And then where are we reacting from? We are reacting exactly at the upper end of this daily channel and somewhere close by on the weekly channel as well. So definitely not a right place to hold your longs, especially when you have bearish engulfing candle at the all-time high. You definitely want to move out of the longs. If you want to short, go ahead, do that based on your own convenience, but I am not holding my longs here. Definitely not. Moving away from this to Russell 2000. Oh boy, not a good place to hold longs. I would be comfortable holding my shorts. Just look at this. Bearish engulfing and big, big, big inverted hammer. I'm not holding my longs. I would in fact be comfortable shorting here as well. We're coming back into this zone, big zone. Again, this is a daily candle, but if weekly also gives me similar confirmation on Friday, that would be far more bigger confirmation because daily is definitely bearish. But does weekly also give us a bearish sign or not? We would know on Friday. So this is all that we wanted to share today. Market does not give good sign. It doesn't look like market wants to hold on to longs towards the end of the year. Maybe center rally is done with. I don't know whether it is done with or not. But as of now, based on the daily candles, based on the 4-hour charts, looking at the secondary indicators, typically at whether it is S&P, whether it is Dow Jones, whether it is NASDAQ or Russell, all of them are reacting from some kind of a resistance, whether it is channel resistance, whether it is trend line resistance or all-time high, double top. All these are signs that market wants to take a break. Whether it is a very big break or whether it is just a short-term break, we will know by Friday. And as of now, do not hold your longs is what I am saying. I am not going to hold my longs. So this is it for the day. I hope you have a good day, good rest of the week, but please do not overtrade and do not be overtly bullish. Do not be overtly bearish either. Thank you. Do subscribe, like, and share our video. We love your comments and please feel free to ask any questions if you have, whether on Twitter, whether on YouTube. We'll always be there to help you out, and as long as we can, we will definitely keep replying to your comments. Thank you. Bye bye. Have a good night.